What is going on, everybody? Welcome back to Trading Learning 101. Today's video, we're going to break down VRNA. This had a big move in the morning on Friday, December 27th, 2019. There are a lot of great takeaways from this chart that I want to show you guys and show you my perspective and my thinking process, what I am actually seeing on this chart. Stay tuned. There are a lot of great golden nuggets I'm going to show you and put on the table with this video. Let's jump into it, everybody. So VRNA was a big mover on Friday, right out of the open. This is a type of stock that I love to trade, but unfortunately with this stock, I missed it. And as I was observing this stock after it bounced off of $10 and was just getting denied up at $12, I couldn't even touch it. But it got me to thinking, after really breaking down this chart, there are a lot of great examples with this stock. And a lot of people overlook a lot of this stuff that I'm about to go over. First off, VRNA had no news to attract volume to the stock. It is a low float stock. It has no news, so it's gotta be a pump and dump. And then when we look at the daily on VRNA, you could see this bottom down here, there is just no history of any volume in this stock. It is a piece of crap stock. It has been trending down since the beginning of 2018 from $20 all the way down to $4. And the chart that I'm currently looking at right now is the 1 minute time frame. And I never see anybody ever point out what happens the previous day when the stock spikes huge. Remember when I said this stock had no news? It's got no history of volume. But as we're looking at the 1 minute here, this was Thursday, all right here. And you could see right at the end of the day, Thursday, it started making this move up right here. Someone was buying and accumulating shares before the close. Most likely a trading guru, a little chat room that likes to pump up low float stocks. What they'll do is they'll load up on a very low float stock right before the trading day closes. And then as soon as they load up, they just pump the stock. They get on Twitter, they get on Facebook, they put emails out, they get the word out to reach as many people as possible so all eyes and more eyes will be on it the next day. And then all these people jump in on it, and then it starts hitting everybody's stock scanners. It's a low float stock. It doesn't take much for it to get going. And it's just pushing these guys who bought it the previous day up in profit. And then they're the ones dumping it all on you as you're trying to enter in on the stock. You got to consider stuff like this when you're trading low float stocks. That's why it's always good at the end of the trading day looking up what are the biggest percentage gainers and what stocks have the most volume on the day. Before I trade any stock, I'm always going to look up the fundamentals on finviz.com or yahoofinance.com. VRNA has a float of 4.3 million shares. A super low float stock. So any type of volume surge into this stock, it's not going to take much for it to get going. The lower the flow of a stock, that's when you can really see the stock skip dollars at a time. When you could really see stocks go supernova parabolic. You got buyers coming in buying the stock. You got unexperienced shorts shorting. And then when it doesn't work out, they have to buy to cover their positions, which equal in a double whammy. And then it just can go parabolic. Like we've seen stocks before go $50, $80, $100. Beyond Meats got a real big short squeeze all the way up over $200. So always look at the stock's float before you even think about placing a trade. And another key thing I want to point out, in the statistics. You don't want to overlook this stuff. If you want to be a day trader, you have to take this seriously. You're a scientist and you're a detective. You want to try to put as many pieces together as you can and have more of a clearer picture than the other guy who's buying at the top of the stock. It's the institutional ownership. The institutional ownership on VRNA is at 62%. Very, very high institutional ownership for a low float stock, which explains why there was such a big overhead resistance at around $12, $13. And if you're still here, make sure you guys hit that subscribe button and check out my video library. As of this video, I have over 300 videos. A lot of great videos I've put a lot of hard work and time into, going over all kinds of different topics, from ETFs, what are barcode stocks, insider transactions, what is stock dilution, stock market history, what is the volatility index. Go to my playlist and I have 21 different types of playlists ranging from day trading confessions, trading strategies, stock market psychology, ETFs, exchange traded funds, how-to videos, stock scanners, stock screeners, stock market history, and my playbook plays. So don't be shy. I make all of this stuff for you guys, sharing my knowledge. Feel free to check it out, dig deep, and learn something new. Now back to VRNA. We're going to break down the 1 minute chart, and I'm going to show you guys what I see and what I notice when breaking down charts. So we've seen that buying the previous day on VRNA, which started to get it going. The stock has no news, like we pointed out. It's a chat room pump and dump. And as soon as the market opened, this thing just started exploding, opening up at $9 and immediately shooting all the way up to a high of $12.53. Now, when you got a stock that's shooting up in price like this, volumes pouring into it, you have to think this stock is going off on everybody's high of day momentum scanners. It's going to get a lot of eyes on this stock. So you don't immediately jump in on the stock. You wait. You wait for confirmation. You start putting the pieces together. You got to be really, really fast with it. And that's why I say you got to be here every single day and break down charts every single day. The more days that you do it, the faster you're going to get, and the quicker you can start to put the puzzle together to complete the story. Every stock chart has a story, and it's up to you to break that story down and put it together. So practice it every single day. You're just going to get better and better and better. So we got stuffed right here at 1250, the high, and then the stock starts to pull back. And when it starts to pull back, we got a mental area here, $10. Now, when it comes to support and resistance, I love looking at whole numbers or mental price levels. Every 25 cents, every 50 cents, every 75 cents, and every whole $1 is going to act as support and resistance. It's a big psychology number. Now that we got $10 plotted out on our chart right here with this green line, another thing I want to point out is this big long wick right here on this red candle, this lower wick. And this is going to, if you're a trader, you should know your candlesticks and you should know your wicks. And also, this is the advantage of looking at charts with candlesticks instead of line charts. So we got this long lower wick here, and you could see it pretty much pinpricks right on that $10 level and then shoots right back up. And it shoots up to $11 and closes at 11. That little piece of evidence right there as a day trader is all you need for confirmation. What that's telling me is the bears brought that down, and there's a buyer right there at $10, and the buyer gave it strength, and the bulls brought it right back up off that $10 level. That's showing strength, and it's a mental level. And then from that $10, when it pinpointed down, it ran all the way back up and made a new high at $12.90. That's an almost $3 move in 5 minutes. That's a wild and crazy move. And when you got a stock that's moving dollars at a time like this, and you got a small account, you have to be careful with your size. If you get in too big and you buy in at the top and this thing drops $2, you're going to be down pretty big. You could blow up your account. Your emotions start to kick in. You start to get nervous. You find yourself sweating. You're freaking out. You take a loss. Then you find yourself revenge trading. And then before you even know it, you blew up your account and you're sitting there just watching the stock, pissed off at yourself because you broke all your rules and the stock got the best of you. And then look what happens. It makes a new high right here. And then we got this big long upper wick right there. And there's a couple things to notice about this. When I see a stock make a new high on the day, I want to see it go on a nice little run. I don't want to see it push up higher just a little tiny bit. I want to see it push up and shoot up. That is showing strength. Now when a stock like this making a new high and it's only a little bit higher on the day, that's showing weakness. Just key things you got to notice. Little key notices like that will separate you from the sheep. And then look, when this stock came all the way back down, look at right where it bounced at right here. That $10 mental level. So that's showing you another strength right there. There's still a buyer there at $10. But when the stock makes its bounce back up, it gets denied right here at $11. So the stock now just made a lower high. That's showing weakness right there. And this orange line, that's the VWAP. It failed to hold over this VWAP. That's another signal that it's showing weakness. And then from this point on, when this stock topped out right here, it just kept making lower highs all the way down. Look at how steep that is. Now, when you see something like that, think of it as a hammer and a nail. The nail and the hammer is just pounding on that nail, hitting it lower and lower and lower and lower into the wood or whatever you're hammering. That's what's happening right here, forming weakness. And what is this ultimately forming right here? This is forming a descending wedge. You got all your lower highs here, and you got your support right here at $10, and you also pretty much have a double top right there, resulting in two bearish patterns. One, our double top, that's a bearish pattern, and our descending wedge, two. That's two patterns of bearishness. And then this stock fell through that $10 level right here, consolidated right here, and then continued falling. And then just continued falling all the way down to $7. One thing I want to mention, when I get on YouTube and I see a lot of newer traders showing their trading strategies and how they like to trade, I was watching a couple videos of people explaining how they traded VRNA or when they traded VRNA real time. They're all buying at the top, anticipating breakouts. I'm going to tell you right now, you got to cut that out. You got to stop anticipating breakouts. Learn to buy dips. Learn to observe dips and let the chart set up, and stop anticipating high of day breakouts, because it's just a bad habit to form. We go through many market cycles, and if you honestly ask yourself, if you're the type of trader who anticipates breakouts and you're always buying, anticipating breakouts, and you're losing majority of the time, you gotta move on and change it up. Stop trying to anticipate breakouts. They don't happen all the time. And when I first started out as a trader, I was always buying breakouts. Always. And I lost my butt off. You can make more or just as much buying dips and selling to the sheep who are buying those breakouts. And let me give you an example. Stock makes its high of day right here. Stock drops all the way down and pulls back from $12.50 all the way to $10 right here. You see that it's a good mental level, $10. It's holding the long wick. Even if you jump in at $11 right there, you're buying the pullback. If it breaks below 10, you get out. And then when the stock rips back up to the high of day, you can sell it or take a piece off, selling into the people who are trying to buy in, all right here, anticipating a breakout. And then when the breakout doesn't come, look what happens. You're trying to buy this breakout at $12.25. You jump in 1,000 shares. This stock rips all the way down to $11, $1.25. You're immediately down $1,200 if you bought 1,000 shares. And then you freak out, you market order out, emotions start to kick in, you're revenge trading. It's just a downward spiral. You gotta have a strategy that you like to trade and that you know. Going back to when I was saying, you gotta break down charts every single day. You break down charts every single day, you're gonna start noticing stuff that other people don't see, and you're gonna develop your own trading strategy based on what you've been seeing on the charts you've been breaking down. Makes sense? That's how I've learned. I've learned from watching many videos on YouTube and just trial and error. I didn't do the paper trading. I traded with my real money. But when I first started off, I lost my butt off. I'm not really a fan of paper trading. To me, personally, paper trading takes the emotions out of it. It's totally different when you're trading with your own capital compared to when you're playing with fantasy money. When you're playing with fantasy money, you're not really taking it seriously. You're jumping in with 10,000 shares. You're quickly market ordering in, market ordering out. When you're trading with your own capital, that's when the emotions kick in. You find yourself holding and hoping. You lose, you revenge trade trying to get it back. You get greedy, you want more, and then you end up giving it back and then some. It's a wild, wild game. So be careful who you learn from on YouTube. I say it all the time. YouTube is just overflooded with many, many people thinking that they can trade. But watch, here in the next 5 years, we'll see who's around. 90% of people fail in the stock market. And now, I'm not tooting my own horn. I've been doing this for going on 5 years now, and I'm still learning and developing as a trader. I will say, be careful who you learn from on YouTube. Be careful. There are a lot of frauds out there and a lot of traders who don't really know what they're doing when they think they know what they're doing, if you catch my drift. Takes a lot of hard work and studying to be a day trader and a swing trader. You have to study every day. And like I said, I've been doing this for 5 years, and you still gotta grind and work hard, studying every single day, because you, in the back of your mind, there's somebody out there who's doing more than you, and they have the advantage on you. And that's what keeps me going. The more I study and grind every day in the markets, that's my time to shine and take advantage of the people who don't put the time in and who are lazy and do not study. And then also one other key thing I want to point out, people who like to trade the open the first 5 to 10 minutes of the trading day, you got to be careful when trading the open like that. The first 5 to 10, 15 minutes, there is no volatility halt. So this stock could have ran up $20, $25, $30 and just kept running. Or if it didn't work out, dropped $5, $8, $9 in a blink of an eye. There's no volatility halt the first 5 to 10 minutes when the stock market opens. When the stock market first opens, it's really chaotic. They're filling orders from the previous day, all of pre-market. There's all this volume surging into the market. It's overwhelming. So that's why me personally like to wait at least 5 to 10 minutes after the market opens to place a trade. If you guys like this video, like I've said, I have many videos breaking down charts, doing technical analysis, and a lot of just great overall videos in general. Like I said, don't be shy, go through, check them out, watch whatever catches your eye, take notes. I put a lot of hard work and time into these videos. There's all kinds of great strategies out there to learn and that you could pick up. You only need a handful or a couple to make good profit in the stock market. And this is VRNA throughout the whole day. You see just this big volume explosion at the beginning of the day, and then at the end, as the day went on, people lost interest and the stock just fizzled out as it went on. But there are a couple things on this chart still that we can talk about. The stock broke through that $10 level and sold all the way down $3 and bounced really good here at $7 up to $8 right here. When it had that $1 bounce, it made this big rounding top. You see how it's curving up and down like that? That is a bearish signal. Whenever you see a stock with a rounding top, that's a bearish signal. When you see a stock with a rounding bottom, that's a bullish signal. And the bigger the time frame you see these on, the bigger the move could be. So after it hit $8, this sold all the way down to $6.50 right there. The previous day, this stock closed at $6.50. Knowing that, this area right here could have been a nice, good buy bounce from $6.50 up to $7.50 for a nice $1 profit. That's what this dotted green line is here right there, is the previous day's close. When the market opens, if a stock is at that level of the previous day's close, you can sometimes see that act as support and resistance. Same thing for the stock's opening price. But when you break down charts every single day and you're looking at all the time frames, you start to notice what time frames you like to look at. For me, I like looking at the 1 minute chart, the 3 minute chart, and the 15-minute chart. Those are my 3 time frames for day trading. With the 15-minute chart, I can get an idea of the overall trend of the stock. The 3-minute chart starts narrowing it down to pinpoint my entries and exits for stock. I can really pinpoint with the 3-minute the overall short-term trend of the stock. And then we got the 1 minute, and with the 1 minute, I really like looking at the candlesticks at support and resistance levels. You can really see a lot going on with the 1 minute chart. You know, you're going to hear a lot of people say the 1 minute chart is too chaotic. There's a lot going on. There's a lot of false signals on a 1 minute chart. But for me, the 1 minute chart is great, especially at the open. I see people looking at 5-minute and 3-minute charts right at the open. Those are too long of a time frame right when the market's opening. With the 1 minute chart, you could really see if there's a fluctuation in the supply and the demand, and if there's support or resistance, like I've pointed out in VRNA. In case I don't see you guys all again, Happy New Year. We're heading into 2020. Not only a new year, but a new decade as well. Happy holidays to you all. Happy New Year. And let's all have a great start to 2020. Let's get on it. Get on that grind. Get to work. Let's get it, everybody. Always work on yourself every single day. The goal is to improve every single day, and over time, we get stronger and stronger. Until next time, everybody, have that patience, have that discipline, and study, study, study. Later, everybody. Happy New Year.
The most valuable commodity I know of is information.